everyone, K-Team here from the Traders Club, TwoTradersClub.com. Thanks for tuning in for tonight's market update. It's good to be back. I've been in vacation for 2 weeks, and so I haven't been active with my videos or tweets, but thank you very much for tuning in again. Today, we're going to do a complete market update, meaning I'm going to look at every single indices out there. We're going to look at oil, Treasury Bond, dollars. We're going to look at gold and silver. We'll look at financial sector. We'll look at Apple, Tesla, Google, Amazon, Netflix, and Facebook. So we're going to look at pretty much every single thing on this list here and kind of give you guys complete market update, complete market overview, and we're going to look at more of a minor to intermediate term sentiment, see what we can expect, you know, this week, possibly going into next week. So I'm gonna try to put these market update videos on a weekly basis. I'm not gonna have certain date that I'm gonna do it, just because different schedules that I have. I'm running a couple business here, so whenever I get a chance, I'll put out these videos. Obviously, you can always follow my YouTube channel. You can follow me on StockTwits and Twitter. The best way would be follow my blog. So at TwoTradersClub.com, and there's a place where, so that's the blog here, TwoTradersClub.com, and if you just come down, and you can do your article alerts here. Just put your email address, and obviously every videos I do or every articles I write, you would always get that alert on your email inbox. So just in case if you miss my tweets or things like that, or any kind of alerts from the social media, so that would be the best way to do it. Anyway, so let's get to it. I'm gonna go through these very, very fast, very, very quickly. And so bear with me here because I got a lot to cover today. And I'm very energetic today. So I want to do this. There are times it's just I kind of nag. I just kind of don't feel like doing it. I do it so I can, kind of support the community and help the followers with the analysis here. But today I just really, really feel like doing it. So I wonder if I can do this in 30 minutes. But I have a lot to cover. Let's get to a semiconductor. Obviously, semiconductors going through the roof. Obviously, this was the high here. We just made this is not the all-time high. Obviously, semiconductor crashed back in 2000 there, and ever since then we've been just really grinding for a while, for about 10 years or so, really building that very, very solid base. So looking at the long-term, semiconductor looks amazing here as far as a primary term, major term is concerned. But looking at more of a minor term, obviously, I put on my Fibonacci extension. Today we just cleared above 138.2% Fibonacci extension level. So we're getting into kind of uncharted territory here. So the Fibonacci tool will be kind of a helpful tool to look. Obviously, this is a reference point. This is not like a, it's not an absolute, but some of the reference points. So this is a level that we clear, and there's a good chance that obviously we may kind of grind higher back up to 161.8% extension level. That might be your next resistance. Obviously, we have a well cultivated higher lows and higher highs here, and looking at a more of an intermediate term here. So we got a well cultivated, a healthy intermediate term trend going on here. Let's look at our oscillators here. Looking at semiconductor, obviously, looking at like a MACD here, we're getting into that level of potentially getting into kind of an overbought status. Same thing with RSI, we're getting into that overbought status. Same thing with the stochastic, we're getting into that overbought status. What does that mean? So many people do not understand though when they look at these oscillators. Just because they get into the overbought status does not mean it must pull back or it must roll over. Actually, it can continue grind higher, the price, and then the oscillators can continue lower a little bit. What does that mean? That means that's a divergence, what we call it, right? Bearish divergence. So at this point, it's really, really going to be hard to just call it, oh, this is top and it's going to pull back. It may or may not, but looking at the price action itself, obviously, we cannot say that for sure that we may see a pullback. But if we do see a pullback, probably next level of support will be this gap area. You see that gap? These boxes, you see these gray boxes, those are gap pockets. So a lot of times when these gap gets open and when the gap gets filled, that can become instant support. The opposite is true, the gap to the upside. A lot of times when the gap gets filled to the upside, that can become its resistance. So that's kind of rule there. So looking at this, I have to say benefit of doubt goes to buyers in all terms, especially in a minor term. But we are working with overbought status. But again, just because it's overbought does not mean it must pull over. We're looking at Bollinger Bands here on semiconductor. Look at this. A lot of times think that once they get to top of the band that it must pull over. Sometimes though, Bollinger Bands, what it can do is it can keep grinding higher, kind of riding that top of the band. Really, what you want to see is not so much the top of the band, but the middle of the band, the middle line. So if it gets below the middle line, then you can see that the minor term sentiment has changed, not that it hits the top of the line of top of the Bollinger Band. So because it doesn't mean, just because we are hitting the top of the line of that Bollinger Band does not mean that it must pull back. It could keep grinding higher like that. So and you know what it could do is it could pull back a little bit, kind of hit that middle line, and then kind of gap back up here. So my analysis on semiconductor is a bullish, and the sentiment is bullish. The price is telling us it's bullish, but I think this is a level that buyers might be getting tired. Some of the oscillators are kind of telling us that this is at overbought status. So I assume that there might be some kind of slowdown in the semiconductor here, but no way means that this is time to short, or we're gonna see a very steep decline at this point. As of today, everything looks very bullish. You can also see that we had a volume spike right there, so you can see with a pretty big volume there. So that's also, you can see that right there, today's move. But sometimes though we have that another way of looking at it is that there might be that one last oomph, like that one last push from the buyers before falling back. But again, as of today, we do not have any kind of evidence that the market is, or the semiconductor market is going to pull back. If we start to see like a bearish engulfing pattern or like a shooting star, something like that, then we could say, hey, maybe the sellers are ready to come back. But at this point, I would have to continue to give the benefit of doubt to the buyers. Let's go to Spider here. Spider, obviously, maybe all-time high, getting above this 213 level on Spider there, and we're kind of holding up. But obviously, now that we're back above, we're still the price is still staying above the 10-year. And you can see that we're just kind of, the 10-year is acting as support there. So if you just if I kind of zoom in, you can see that we're forming some kind of, it might be some kind of bull flag or some kind of bull pennant pattern. But these pattern though, I used to think that these patterns may be 65% bullish, 35% bearish. My thought on this has changed. I would have to say it's a 55% bullish and 45% bearish. For the reason I give that, because a lot of times you never really know. They can either break to the upside or downside. It's almost 50-50. But for the fact that we have made this kind of run and we're consolidating, I have to say that it gives slight better chance that it's going to break up to the break out to the upside there. So this is definitely a consolidation, more of a some kind of a continuation pattern if it does break out. Okay, because I've seen these patterns break to the downside. You can see all these tiny candles there. We got doji, spinning tops, and dojis, and you got these lower wicks here. So it's just market's just kind of consolidating, kind of digesting its gain. Maybe you can say that we're correcting in time, and looking at a minor term, resting before going higher, but really it's no way of knowing if you're going to continue, if you're going to break out to the upside or to the downside. But again, I think we have a possibly higher probability that it may break up to the upside. Looking at the oscillators here on Spider, I would have to say we are kind of working with overbought status. You can see these oscillators are kind of curling down a little bit, and then MACD, obviously we just met with the fast line there, the blue line and then red line. So it's that kind of signal that maybe the market will slow down or pull back. Again, we are, whole market is working with kind of a minor term overbought status. But obviously the outlook of it is bullish, and we have well cultivated higher low and higher high here in the intermediate term. And with this cultivation, I would have to say the intermediate term trend is healthy and well. I think any kind of pullback will be an opportunity to either add or start a fresh position. I think next level support, if it does pull back, is 213.76, and then if it continues to maybe even 210.54 there. If I just throw a little Fibonacci tool here just to look at our extension levels, I think if we start to maybe pull back and continue, maybe next level targets of 224.38. If this thing keeps on grinding higher, then also the 138.2% extension level is a level to watch. Let's go through these quickly here. Again, Dow Jones. I'm not going to do full analysis on these rest of the indices, because obviously we've done a full analysis on semiconductor and spider. So I'll go through these quickly, just looking at more of price action analysis, because they're pretty similar here. Dow Jones, obviously this was a big thing after it cleared this level. I've been talking about this. I've been advocating why the market will not crash in 2016. If you go to my YouTube channel or my blog, you can see tons of videos on that. Ever since then, we cultivated higher high here. We pull back a little bit. There's a little bit of Brexit panic. We bounced off of it. I had a video there why the market bounced after the Brexit panic, and we cultivated that intermediate from higher low, and then we just went straight up, and we're pulling back a little bit. Dow Jones looks more like bull flag type of pattern. We're just staying above that 10 EMA here, just staying above it. That means benefit of Dow still goes to the buyers. As long as it stays above 10 and 20 EMA, minor term benefit of Dow continues to go to the buyers. Maybe also the Dow Jones want to retest this old resistance as new support. So that might be what's happening here. NASDAQ Composite, we're going to look at Qs though. Qs, obviously this was an important level. We cleared this level, and that's a good sign for the buyers. And obviously, if this thing would have continued lower in this fashion, then that would have been a cultivation of lower highs and lower lows. And in that perspective, in that process, we would establish some kind of downtrend, but we didn't establish downtrend. Rather, we have established intermediate term uptrend here. We're back at this resistance at 114. We are seeing kind of a high wave doji or candle type of candle. That's a wild card, I would say. Just because we have doji doesn't mean it's going to change its direction. But let's say we start to kind of gap down and then do something like this, then I would have to say that doji was an evening star doji, meaning it's a reversal candle. Then this thing could possibly come back down and fill these gaps. If not, if we start to see kind of a higher move here to the upside this week, then I would have to say the next support or next resistance will be on the Qs. Let's see here. Right here at 115.36. Let's move on here. Let's look at Russell 2000. Russell 2000 made some good move. Fact that this is, we've been talking about this inverted head and shoulder type of action here. You can see the left shoulder head, right shoulder, inverted head and shoulder pattern. This is a reversal pattern. This is a bullish reversal pattern. Especially, the small caps, the Russell did see much steeper decline versus, other major indices like Dow Jones or S&P 500. You can see came down a lot. And then it kind of cultivated this inverted head and shoulder, and we're like getting into that breakout level here as we are sustaining above this vicinity. You can see that 1020 EMA still rising, and you can see that it is acting as a support last several days here, and this thing possibly breaking out of this bull pennant type of pattern. But volume has been low, so there has been a lot of buyers, not like semiconductors. So this is a level to, I think, in a minor term, to be cautious. Let me just look at the oscillators here real quick, see where they're at. Yeah, so you can see oscillators actually, I think there's a little bit more room to move on the RSI. I think MACD is kind of getting into the level there, possibly crossing, not sure yet. Stochastic is kind of moving sideways, so it's telling us that the market is kind of grinding higher, but we're not seeing a lot of buyers. So I think this could go either way. Either it's gonna achieve, or it's gonna get a lot of attention, and then it's gonna have a huge move to the upside. And if it does, I think 126.14 will be kind of a next intermediate term target. I think about 120. I think about 122. I think more of a minor term target at 122 there. But if this thing will start to lose steam, then there's a good chance there's a lot of gaps that possibly that it wants to fill, and so next support will be possibly in this level there. And I don't see Russell going any lower than this. If this thing pull back, I think 114 or so, and then we possibly just kind of bounce right back up. But it's kind of no way of knowing as of today, though. I think it can go either way. But I would have to say benefit of doubt still goes to the buyers in the minor term. Okay, don't worry about the flashing lights here. Market is still open. I'm actually producing video while the market is open. Market will be closed in about 10 minutes, so they'll kind of go away. Let's go to financials here. Banks. Banks been actually struggling a little bit more than the other indices because, unlike any other indices that we looked at, today, most indices we looked at, they're all making either new highs or, have some kind of reversal pattern, like, Russell had an inverted head and shoulder pattern, things like that. But financial sector is still bound by this prominent resistance level, right? You can see that it has been a strong resistance in the past and pretty much all year long since last year. So that's kind of a concerning signal. But I think today, though, maybe for the first time, the buyers are trying to overcome this resistance by forming some kind of bull pennant pattern. Again, remember what I said, I think this is more of a 55 to 45, so really have to see where it breaks out to. If it breaks out to the upside, I think the next support will be 24.25. If you continue higher, then I think there's a good chance we'll fill this gap here at 25.10. But if we lose steam here, I mean, the volume has been quite low, so that's a little bit concerning there. But, if we lose steam here, there's a good chance that if I just draw a little bit of support level right here, there's a good chance that this may come back down to this support, possibly kind of getting zigzagging here for a while. So I think this is an important level for the banks. You generally want to see banks do well along with the major indices for this market to be categorized as healthy. But obviously we've seen semiconductor do well, we see S&P 500 do well, we've seen Dow Jones do well, we've seen Russell 2000 forming that inverted head and shoulder. So at this point, I think we can't just because the banks are slowing down, we can't just conclude that the whole market is bearish, right? We did make new all-time highs on Dow Jones and S&P 500. I think near Wilshire 5000 is just right at that all-time high level. As obviously semiconductor made new highs there. Let me just check New York Stock Exchange real quick, see where it's at. I mean, New York Stock Exchange looks a lot like Russell 2000. If I just put some of these levels here, just real quick. So it looks a lot like left shoulder there, head, right shoulder, and you can see that we also have cleared this kind of a downtrend resistance. So looks a lot like Russell 2000. I can also even draw this support level right here. So any kind of steep pullback you want, as buyers, you want to see this level holding. But I have to say, though, at this point, market is starting to look more and more bullish. It is gathering more and more evidence that supports the bullishness, that supports the move to the upside. But again, the banks are concerning bit here. But I think if we can able to here, let me put another line there. So I think if we can able to get above 24.25, I think there's a good chance that the financial sector also possibly kind of forming this kind of a leaning inverted head and shoulder, right? You got the left shoulder there, head, right shoulder. But I think what we want to see is kind of a continuation of this trend. I mean, obviously with this higher low, we want to see continuation of that. So it's a bit of concerning, but I think with the bull pennant pattern, let's see where it breaks out to. Let me go look at our oscillators real quick. Actually, MACD has a bit more room to move. You can see that MACD has some more room to move. It's starting to slow down a bit, though. RSI also has a room to move, and stochastic is the only one kind of getting into that grinding overbought status level there. Actually, I want to look at, let's see, oops. Bollinger Bands also. Bollinger Bands, we're pulling back, and Bollinger Bands are starting to squeeze a little bit. So what you want to see is kind of this thing getting back up to hit that top of the Bollinger Bands, you know, and then kind of continuing in that if you're a buyer here. ADX is pretty much, ADX, a strength indicator, is pretty much moving sideways, meaning there hasn't been any strength, and that's, we can see that from the price action. So let's say if this thing moved to the upside, this thing will move back up, saying that there's strength. Let's say if this thing started to move downside, it will move back up, saying that there's strength to the downside. So that's a directional movement. This is a strength indicator, so pretty much telling us that it is just moving sideways. So let's see where the financial sector is. Out of all the indices we looked at today, I think all the indices look pretty bullish, intermediate term, but we're working with, kind of an overbought status in the minor term. Financial sector, obviously, dealing with that kind of this prominent resistance level. This is a level to overcome for financial, for the banks to do well. So let's go to other here. Let's go to oil. Oil's still in trouble. Obviously, we're still in this kind of bound by this channel. You can see that we got lower highs, lower lows. Definitely the trend is down in the primary term and intermediate term and in the minor term. Looking at more minor term, we got lower highs, lower lows. We've broken below this support level. The next support, I would have to say maybe even 512. We've been gapping down. All these moving averages sloping down. I mean, you just look at this, and just like everything's bearish. I mean, there's no way of knowing that anytime it's gonna bounce. I mean, next level of support is at 481 and then 431. If we lose any of those levels, obviously you can see last time we lost the level with the gap down, this thing came down much lower. So if we lose that, there's a good chance even coming back down to this channel, right? What would take for it to reverse? I mean, you would want to see possibly something like this. You see the cultivation of these kind of a pattern, but we don't see any of that. It just right now it's bearish in all terms: minor term bearish, intermediate term bearish, and primary term bearish. It means just get out of oil. Do not guess at this point. Just wait for more signals there. Let's go to Treasury Bond. Treasury bonds actually in an uptrend. Let's see here. Let me just put these pivotal levels for your viewing experience just really quickly. I'm just putting this major pivot level so you kind of see what's going on here. So obviously we've been kind of retesting this old resistance and new support. We have well cultivated uptrend here in the intermediate to primary term. Looking at more of a minor term here, we're trying to stay up above 10 EMA, 20 EMA. This thing came down, and then now we're trying to stay up, and these 10, 20 EMA is kind of flattening out. And if this thing continues higher, you will see these 10, 20 start to wrap around it and start to move upside. That means the trend is shifting, in the minor term trend shifting to the upside. So as of today, I would say that the minor term has been neutral, but you want to see 10, 20 kind of curling back up there. Let's look at dollar. Who was it that said, in May 28th, the dollar is going to crash? I mean, people, again, I say this a lot, it's just baffling to me that people just give so much credit to people who call things down to date. I mean, how many people came and said that we're going to have an end of the world or Jesus is coming back down to date? Nobody knows. Even the Bible says nobody will know when Jesus is going to come. Only the Father knows. He doesn't even know. Jesus himself, he doesn't know. But people always say that he's coming, this time, the end of the world is coming, the dollar is going to collapse, and this day, the whole market is going to crash, and this day, wait till September. I mean, seriously, that's what you're going to go by? It's baffling how some traders will go by with it. But anyway, today is July 26th. So dollar hasn't crashed yet. And, if anything, though, we're consolidating in time, potentially. Maybe we're going to get into some kind of a continuation pattern, like a big picture, maybe a huge bull flag type of pattern before going higher. I'm not sure at this point. all I can say as of now, the minor term sentiment is starting to get into more of a bullish sentiment. A minor term, we're starting to cultivate maybe some kind of a minor term uptrend here. We're above 10 EMA, we're above 20 EMA. These moving averages are rising. 200 SMA is flattening out, and then 100 SMA is still kind of in the process. So we're dealing with kind of a mixed signal, kind of a big picture. Maybe there could be some kind of concerning signal, but the market, I mean, the dollar has been resilient. Obviously, this was the bear trap below this low. People thought maybe, you know, this is a good time to buy puts, but then that's how this market works. Market loves to trap people. And then we kind of continue higher. I think next level supports 25.57 if it continues higher. Let's go again. Let's look at some of the miners and gold and silver. I still have a lot. I got into 25 minutes here. This video might get into 40 minutes, but bear with me. So GDX is a good sign that it actually broke out of this channel. That's a great sign. And then we just rushed up here. We made equal highs with this resistance, and we're pulling back a little bit. So what now? Obviously, I think, you know, gold has a pretty good potential at this one, possibly completely reversing. What I'd like to see is, though, you know, much steeper kind of a cultivation of intermediate term higher lows and higher highs. I think, you know, this kind of move is pretty parabolic in my opinion. I think we need to see much more, you know, well, how do I put this? More like, because, you know, when you're cultivating an uptrend, we all know that the market is not going to go straight up like this. Sooner or later, you want to see this market cultivating more solid higher low. I mean, here, I'll give you an example on GDX if I can see, you know, past move. Okay, so you can see this thing didn't move straight up. It had its up and down, and it does creating that trend. You see, when the market moves so quickly though to the upside like this, then things can get pretty hectic sometimes. So when you look at even this one here too, I mean, we had that kind of sideways move. We came down and it just went straight up. But if we just started cultivating, then maybe we would have bottomed there, but we didn't. We fell back again. So this move, it's kind of like, to me, looks more like a two straight ups. Obviously, I'm not holding any position on gold right now at all. I would like to see much, portioned or positioned intermediate term higher low before we can cultivate more of a solid trend there. I'm talking more on a primary term, but obviously this looks bullish as we're staying above 50 EMA. We are now back below 10 EMA though. Let me just go through this here real quick. Yeah, we're back below 10 EMA and 20 EMA. Looks like that has been acting as resistance. So if this thing continues low, I think next level of support will be that 50 EMA at 26.90, and then maybe that 100 SMA there. We have also support at this vicinity. That's the level of a gap fill. So I think if this thing continues lower, maybe that's a level to watch as a potential support there. Gold also kind of, gold broke out of this channel. That's a good sign. And then we got up here, but we're starting to pull back here. We're back below 1020 EMA, so benefit of doubt actually goes to bears, the sellers in the minor term. However, in the intermediate term, we're still working with that kind of rising 50 EMA. So in the intermediate term, I think we're neutral to bullish at this point. If this thing kind of comes back down to that 50 EMA and then bounces back up like it did right here, then that will be considered bullish and possibly make another high there. So that's a level to watch. I think if it continues to lower, 124.20. Silver also kind of came out of this channel, and then we came up to this level, and then you can see that there's a gap here. That gap fill kind of acting as an instant resistance. Remember we talked about that earlier. And so we're pulling back. We're sandwiched between 10 and 20. So 10 is acting as resistance, 20 is acting as support. We're kind of hanging around here. So I think the longer it hangs out, the more likely it's going to pull back. If the bear or the buyers want to just come out of this, I think it wants to do it. It should do it next few days. If not, if you keep grinding here, I think it's probably 10 EMA is going to continue to kind of, you know, pressure this thing and then possibly filling this gap and that gap. And then obviously the 50 EMA level to watch. But last time we bounced, the silver actually bounced off of a 100-day moving average right here. So I think if we lose a lot of these levels, there's a good chance we might even come back down to 100 SMA, and then that's a level to watch. And we've been cultivating though higher lows and higher highs, meaning we're in an uptrend. So there's a good chance that it could bounce and then get back up here, but we'll have to analyze the market or silver again at that time. So those are my analysis. Let's go to the equities here. And again, we got 30 minutes in. I'm going to do this really quick. Apple, obviously, Apple earnings coming up tonight. Is it tonight? It's pretty sure. Hold on a second. Yes, the earnings tonight on Apple. So that, you know, obviously, nobody can guess where that's going to be, how it's going to end. But here's the thing, though. Here are some of the pivotal level that you want to watch, regardless, after the ER result. I think if this thing reacts positive way to the upside, then what we want to see, what the buyers want to see, is that we want to see this thing getting above this downtrend resistance and possibly even staying in this vicinity here. If it goes to anything lower than 90 to 98, that will be a problem. So, the price actually want to stay above 90. So anywhere, I mean, if any result that happens tonight, if it's react in a negative way, the buyers want to see this thing staying above 90. Anywhere below 90 could be really bad, excuse me, for this stock. But right now, if it's staying anywhere above this downtrend resistance, that will be a great sign. So let's see where what the result's gonna be. Looking at a more of a big picture though, here, let me give you something. We are actually still holding the 200 SMA here. And something that I've been talking about, I think a while back, watch this 200 SMA. You can see this is a weekly, okay? This is a weekly chart right here. Okay, that's a 200 SMA here, the pink moving average. Come here. That's where we bounce. We're just right at it. Again, just because it's there does not mean it must bounce, but it has it's credible moving average. It has a strong resume. Why? Because the last two times when we saw steep correction on Apple, it was the savior. That weekly 200 SMA was the savior. So the question is, can it become a savior this time around? That will be the question, right? Let's continue on and go through Tesla here. Tesla is looking, let's see. Let me put some of these lines. Forgot to do that before the video. For the pivotal levels here. And we got this support going in like that. Let's throw out downtrend resistance like that, right? So good news is we bounced here. Another good news too is that we cleared this resistance, but we are still below this resistance. This resistance is a must overcome level. Actually, I'm gonna move this to up here. This resistance must overcome. Let's make this red. All right. This resistance must overcome level for the minor to intermediate term perspective. We do have this inverted head and shoulder. We've been talking about this inverted head and shoulder on Russell and New York Stock Exchange, if you guys remember. We do have this formation, but it's not confirmed yet. It won't be confirmed until we get above 26.44. So if this thing kind of gets up here, clear this level, gets up, and then comes back down, retest, and then if we break out, that will be very, very bullish sign. However, if this thing gets to resistance, pulls back, and there's a good sign this will act as support, and we zigzag, and then start to fall over, and then do this, that will be bearish. So those are things to watch. But I think overall, though, if you look at like more of a big picture, I'm leaning more to the bullish side on Tesla in the intermediate and primary term. But when we look at a more minor term, I think we need to get above 235.14 for it to become bullish, for it to shift the sentiment to back to bullish. I would have to say though, as of today, for the fact that we're staying above 10 EMA, 20 EMA, 50 EMA, and even 100 SMA is rising back up. We did have a bullish cross on the 100 and 200 SMA, but 200 is still kind of moving sideways, giving us that overall picture that we're not trending in a big picture. And we already saw that. We don't need 200 SMA to tell us that we're not trending. We're not trending in a big picture. Does this look like trending to you? No. So 200 SMA is saying that we're not trending. We already get that. But looking at the 10 EMA, 20 EMA, and 100 SMA, they're all rising back up. So we are kind of trending in the minor term. But again, 235.14, we need to get above that. I think above that, I think things will look good on Tesla. Let's look at Google. Google here, let me just do this and put these line pivotal levels for you guys. Do that. We do have a gap right here. Okay, so we're working with the gap fill action here. Okay, and we have resistance like right there. So it's a little bit more hectic for Google. Obviously, Google's be pretty much moving sideways, kind of, and that's how Google likes to move, though. I mean, if you really understand the big picture on Google, that's kind of what it does. We make up, we move sideways, we go up, we move sideways, we go up, and then we move sideways. That's how Google likes to trend. So a lot of times it can be very volatile for you to trade this short-term or swing trade. But if you understand the pivotal level where it breaks out, you can able to trade this pretty well. I remember last time we traded. We started going long here, and then we closed most of our positions up here, knowing that we were in a sideways move, and there's inverted head and shoulder pattern, and then we anticipated the breakout, broke out, came down, and then got up here. And so you can trade that way if you understand the big picture. Anyway, so Google, looking at Google more of a minor term, it's a good sign that we gotten above this level. That was a pivotal level, and last time we even called it a lower low. At the time, you can see we got a hammer candle right here. It's like almost like a morning star candle, hammer. Knowing that this is like we got this gap. This is a lot of things happen right here. We got a island reversal, gap down, gap up, island reversal, hammer, morning star reversal. So we got three things going on here, and that's kind of what started the whole move. Went very, very fast, got up, cleared this resistance. That's a good sign. We're consolidating in short term. Looks more like a bull flag. If this thing breaks out, you want to see this thing completely filling this gap at 780 and potentially pull back, and then you want to see that if you're a buyer at this point. But again, the downtrend resistance at this level, so if we do break up, there will be hindrance there, and so that's the level to kind of watch if we can able to break above it or not. But at this point, I would have to say the minor term sentiment is bullish with the 10, 20, 50. They're all rising higher. Let's look at Amazon. Let's put some of these levels also there, here, and here. So Amazon's pretty much been kind of a stair-stepping higher. You know, we go up, come down, just really respecting these technical levels very, very well. Coming back down, retesting, going up. So basically, it's just retesting the old resistance as a new support and really stair-stepping here. We got pretty big gap. Was it an earnings gap? Looks like this is an earnings gap there. That was a kind of good move there. And obviously, we hit that resistance, and then we pull back a little bit, but we got up, and then, you know, old resistance becoming new support, got up, came down, we retested again, we got a gap up, and then we made new highs, and now we're retesting that about 70-30, 732, 74 level. So obviously, intermediate term is bullish with the well-cultivated uptrend there. But right now, we're just testing 10 EMA, 20 EMA. We're below 10, we're above 10. So I would have to say if we lose this level, next level to watch would be 50 MA, because 50 MA did act as strong support last time. You see that June 27, it acted as strong support. And not only that, back in April 28th, that 50 MA acted support here. And what does that mean? It means it has credibility. It has strong resume. So when it gets to the level, that's definitely a level to watch, which is that 50 MA standing right now at residing at 715.12. That's a level to watch. Netflix and Facebook will finish this video. Let me redo this. I forgot I was going to do this before the video. I must forgot to put a new pivotal levels there. There you go. And then maybe downtrend line. Normally I would put the resistance this way, but with the, I think, negative earnings, I'm gonna just adjust this a little bit like this. So it hits this level also. So we're kind of bound by this downtrend resistance on Netflix and this horizontal support. That's what's happening here. This kind of looks like potentially some sort of a descending triangle type of pattern. Again, that promotes a bullish sentiment. However, these triangle patterns are never, I don't know, they're never reliable. It's just because, I mean, is this a triangle pattern or is this a topping pattern? You see. So really, instead of trying to guess this, instead of like trying to argue with this, everyone, well, this is a triangle pattern, therefore it's going to do that. Or some bears say, well, this is a head and shoulder pattern, this is a topping pattern, it's going to do that. Instead of guessing and arguing which pattern that is, I think best way is just kind of wait and see where it's going to break out to. I would have to say, I'm going to make this red. I would have to say if the sentiment to change to more of a bullish side, we need to get above 103.37. For this sentiment to become more bearish, I would have to say this thing has to get well below 80.14 or 84.48. So we're just kind of stuck in this vicinity and just kind of seeing what the buyer is going to do. But if the market is kind of bullish environment, these things usually they grind higher and higher and kind of, they follow the overall market sentiment. So the problem is, let's say if market starts to pull back, then these kind of stock that is been kind of grinding or sort of in this kind of unknown pattern type of deal, what's going to happen is people will start to panic and then could see much more steeper decline here. So what I would say is, like, I mean, watch Netflix. I wouldn't want to go long. To be most safe, you wouldn't want to go on Netflix. That would be the most safe way, well above 111.25. So this time will be just kind of level to watch there. Let's go to actually looking at a more of a minor term perspective. Yeah, we got 100 SMA declining, you got 200 declining. We did have a dead cross there. 200 SMA at the top, 100 SMA below. 50 MA is declining, 20 MA declining. I mean, it's pretty bearish sentiment looking at more of a minor to intermediate term. Let's look at Facebook, and I'll be done with it. Facebook, obviously, Facebook is bullish. 200 SMA has been strong support. You can see that these levels continue to hold, and then if that, the 100 SMA is right above it to hold that, we're rising 10, 20, 50. Everything says this is bullish. You can see all these moving averages rising higher. But let's see if what the oscillators are saying on Facebook. Obviously, MACD got some more room to move here. RSI is kind of dealing with the overbought status, and so is Stochastic is working with the overbought status there. Let me look at Bollinger Bands real quick. Bollinger Bands, we're dealing with kind of rising middle line there, but ADX is actually telling us that it has lost its steam. It's currently down, so ADX saying that there isn't much of strength there. So if this thing falls back below the middle line of the Bollinger Band, there's a good chance it will come back down to the bottom of the Bollinger Band. You can see last few times that level did act as support. So overall, I think price action says that the moving averages are saying that we're bullish. The oscillator is saying that it's kind of slowing down. I think we might start to consolidate. Maybe we'll continue grind higher, but we might not see a huge move at this point. What I really worried the most, though, when you look at a monthly chart on Facebook, it's just this to me. I don't know. I mean, if you're trading short term, like day trading, if you're trading for a week or so at a time, I think there's still a room that you can still make money off of this. But if you're more of a longer term investor, if you're more of a position trader like myself, you hold things much longer, Facebook is not a good stock right now at this point to kind of go with that. I mean, if I just go to oscillators and go to monthly chart, you can see, I mean, they're just dealing with, just staying on that overbought level. We're just grinding at that level there. So I just, at this point, I think if you're a longer term trader or if you're an investor, I think Facebook is not the stock to get into it. It doesn't mean it cannot go higher. I mean, does not mean that it cannot go higher. It could. I just think that sooner or later we're probably going to, I don't know when, probably going to kind of see, I think what will be healthy for Facebook. I'm not saying this is going to happen, okay? So don't call me that that's what's going to happen. I think even get kind of clearing the 38.2% retracement and then kind of cultivate that stronger, reliable primary term higher low. And I think if he does that, if he get into any of these, if he pulls back to any of these Fibonacci retracement zone right here, I would like to go long. But for longer term. But right now, you know, I think anything short term will work. Anything, any kind of a, you know, like this is a good level to go long right here after clearing this resistance, and then kind of trade it for like 2 weeks and then close out your calls. I think that's a great strategy to work Facebook. But anything longer than a week or 2 weeks is probably a difficult trade on Facebook. Again, thank you very much for tuning in. Thanks for listening to the whole thing. Complete market overview. I'll try to do these more on a weekly basis. So again, follow me on StockTwits and Twitter, 2tradersclub.com, and on YouTube, 2K Kim. Have a great night. I'll talk to you guys next time. Again, if you have any questions, please use my blog. The link, if you're watching this through YouTube, the link is below this comments or below this video section there. Please use my blog page for asking any questions, and I'll answer them properly. Thank you very much. I'll talk to you next time.